These Singapore stocks are paying up to 13% dividends, but there's one thing most beginners don't understand about them. Hey guys, today we are breaking down the top 5 highest dividend stocks on the SGX, ranked by yield. And trust me, the highest yield doesn't always mean the best investment. So let's get right into it. So the first thing that I like to establish first is that most of these are REITs. A real estate investment trust is required to pay out at least 90% of its income as dividends. Plus, these dividends are not taxed in Singapore. That's why Singapore is basically a dividend investor's playground. The first stock that I'll be talking about is YZJ Financial Holdings. The dividend yield of this stock is 12 to 14%. This isn't a REIT, it's an investment company spun off from YZJ Shipbuilding. So the yield is so high because this company has strong earnings and capital returns. But the thing that investors should take note of is that it's not as predictable as REIT income. So there is high yield and higher uncertainty when investing in this stock. The second one that I'll be talking about is Sasir REIT. So this stock yields around 9 to 10%. It owns outlet malls in China, and this stock has strong cash distributions. But some things that investors should take note of before investing in this stock is that it has a payout ratio of more than 100% and China exposure. So the yield is high, but you should watch sustainability. The third stock that I'll be talking about is the Elite UK REIT. It yields around 8 to 9% yearly, and it focuses on UK government leased offices. So the pros of this is that it has stable tenants. But the risk that this stock carries is that it's highly dependent on the UK economy and currency. So it's more of a defensive high yield play. The fourth one is Mapletree Logistics Trust. It yields around 6 to 7% yearly, and it owns warehouses across Asia. So this REIT gives you exposure to e-commerce, but it has a payout ratio of above 200% and the dividend growth is negative. So it does offer you stable assets, but it is under pressure. The last one that I'll be talking about is the Keppel DC REIT. So it yields around 6 to 7% annually, and it focuses on data centers. So this really feeds into the tech and data demand that we have been seeing recently. But this REIT really is exposed to interest rates and valuations. So this can be seen as a growth and income hybrid. But here's the truth for people who want to invest. Higher yield often means higher risk. REITs pay more because they are forced to, and payout ratio above 100% can be seen as a warning sign. So you shouldn't just chase yields, because the real goal isn't the highest dividend, it's the one that can actually keep paying you long term. If you guys have any questions about the REITs and stocks mentioned in this video, comment them down below and follow for more videos. Thank you, and I'll see you guys in the next one.